The other very important tool that Hurst defined for working with a Hurst cycles analysis was the VTL. That acronym stands for Valid Trend Line. The VTL is really just a trend line, but it is validated by obeying certain rules that Hurst specified. You can apply VTLs onto your chart by simply adding the Hurst VTL indicator. Let's do that now. I'm going to add the Hurst VTL indicator onto the chart, and we'll use the default inputs for now. There we see some trend lines, and those are of course normal trend lines, but they are also validated according to Hurst's rules. So what is a VTL? Well, it is a trend line that joins two consecutive troughs or peaks of particular cycles. And so you can get VTLs for each and every cycle in your analysis. The VTL indicator, similarly to the FLD indicator, will display various FLDs according to the time frame that you are looking at and your zoom scale. So you can get an upward pointing VTL, of course, and a downward pointing VTL. What we see on the chart here are two downward pointing VTLs, and there is this white VTL over here, which is for the white cycle, and as you can see, it connects the peaks of two consecutive peaks of the white cycle, the 5-hour cycle. There is the first peak of the white cycle, and there is the second peak of the white cycle. Here we have a purple VTL, which is a VTL of the purple cycle, and it is also drawn between two consecutive peaks of the purple cycle. There's the first one, and there's the second one. How are VTLs used? VTLs give us very useful information about what is happening in terms of the cycles in the market. Because when a VTL is crossed by price, it provides us with confirmation that the cycle 1 degree longer than the cycle the VTL is based upon has formed a trough or a peak in the market. Let's break that statement down a little bit. What do I mean by a cycle 1 degree longer? Well, as you know, we work with a nominal model, which is a list of cycles. A cycle 1 degree longer is simply the cycle that is one level up in that nominal model. And so, with the example that we see on this chart in front of us, we have this purple VTL over here. If that VTL is crossed by price, then it will confirm information about the cycle 1 degree longer. What is the cycle 1 degree longer than the purple cycle? You simply look at your diamonds and you can see that information. The cycle 1 degree longer than the purple cycle is, of course, the white cycle. So if price crosses this purple VTL, then we will have information about the white cycle. What information will we have about the white cycle? Well, if price crosses up above a downward pointing VTL, it tells us that a trough of the white cycle has formed in the market. If we have a look at this analysis, we can see from this circle and whiskers down here that a white cycle is expected to form in the markets at the moment. We will have confirmation that that white cycle has formed in the markets when price crosses up above that purple VTL. Let's look at an example of an upward pointing VTL to explain what information we can gather when price crosses down below an upward pointing VTL. Here is an example of an upward pointing purple VTL. That's our second dynamic intraday cycle, of course, the 90-minute cycle. And when price crossed down below that VTL just a few minutes ago, this is a 1-minute chart, that gave us confirmation that the next longer cycle, also of course here the white cycle, the 5-hour cycle, it gave us confirmation that the white cycle had formed a peak in the market. And here you can see that of course we are expecting a peak, in fact a peak of the 1-day cycle, and here are the 5-hour cycle circles and whiskers. Placing of that 5-hour cycle has obviously been a little difficult to calculate, but when price dropped down below that purple VTL, we had confirmation that the 5-hour cycle, the white cycle, had formed a peak in the market. Let's take a look at some other examples. Here on a very different time frame is an example of a 40-day VTL, and it's an upward pointing VTL. So you can see here is the VTL itself, and it is drawn to connect the troughs of this 40-day cycle trough and this 40-day cycle trough over here. The line is drawn between those two troughs and extended into the future. When price drops down below that VTL, which it hasn't done yet, but when it does, it will give us confirmation that a peak of the next longer cycle has formed in the market. The next longer cycle above the 40-day cycle is, of course, the 80-day cycle. So when price drops down below that 40-day VTL, it gives us confirmation that the 80-day cycle peak has formed in the market. Now, as a matter of interest, our Hurst Cycles analysis indicator has already confirmed that that peak has occurred in the market. There it is there. That's that big stack of diamonds up at the top of the chart. It's in fact a peak of 20-week magnitude. But in there is the cyan colored 80-day cycle peak marker, and so the analysis tool has already decided that the 80-day cycle peak has occurred. Hurst Cycles analysis is a matter of putting together many different pieces of a puzzle, as you're probably realizing. And the analysis tool takes an analysis approach to solving the puzzle of the Hurst Cycles analysis, and tools such as the VTL and of course the FLD can be used to confirm the analysis that you're seeing on the chart. So even though price has not dropped down below the VTL yet, when it does, that will give you added confidence in the fact that that cycle peak has formed in the market. Let's speak about some of the other details of the VTL, and we'll go back to this Euro-US dollar 5-minute chart. Here you can see that the VTL for the purple cycle has in fact been redrawn, and it is now over here. Why is that? Because the VTL connects the two most recent peaks or troughs of a particular cycle, and you can see that the analysis tool has identified another peak of the purple cycle, which is over there. Therefore the VTL is correctly drawn between the two most recent peaks. Now we're seeing an interesting thing happening. As price has breached or crossed that purple VTL, it gives us confirmation that the white cycle trough has formed in the market. It is no surprise that we now, when we look at the foot of the chart, see that that white cycle has indeed been positioned there by the Hurst Cycles analysis tool. You can see how all the different pieces of the puzzle begin fitting together. Now on this chart you can also see an example of one of the dangers of the VTL, and that is shown with this white VTL. The white cycle VTL is correctly drawn between two consecutive peaks of the white cycle, this one here and this one over here. However, what happened following this peak of the white cycle, which has been found over here, is that price fiddled around for a while, went down, came back up again, and you can see that the VTL has, strictly speaking, been breached many times. This highlights a danger with the VTL, which is that when you have a falling market, such as this market was during this period of time, when you have a falling market, the peaks of the cycles will indeed be present and in place, but they can be difficult to identify. The same thing happens in a rising market, where the troughs of the cycles can be difficult to distinguish from one another. This highlights the danger of the VTL, which is that it is very closely based upon the analysis. And so when price crosses a VTL, you need to ask yourself, are the peaks or troughs that that VTL is based upon really, absolutely, without doubt, the peaks or troughs of those cycles? Because your VTL is so closely based on the analysis, if there is any question in determining those peaks and troughs, then you need to also question the validity of the VTL. Now, in a moment, we should find that the Hurst Cycles analysis tool will identify another 5-hour cycle peak in here. And so I'm going to pause the video and wait until it does that. And here we are. The Hurst Cycles Analysis tool has identified another 5-hour cycle peak over here. Therefore, the white cycle VTL is now correctly plotted between these two peaks over here. Now, when price crosses up above this VTL, we will have confirmation that a trough of the next longer cycle has formed in the markets. That is, of course, the one-day cycle. Let me show you something interesting that you can do with these VTLs, and that is that you can adjust them to suit your own opinion of what is going on in the markets. I will simply double-click on this VTL, and you can see that I can change the starting and ending points of the VTL. So I can drag this VTL up to this peak over here. Double-click on the VTL again to deselect it. And now I have forced the VTL indicator to do something which is not strictly correct. It is drawing a VTL between this 5-hour cycle peak and this 5-hour cycle peak over here, and it is ignoring this 5-hour cycle peak. That's not strictly speaking correct, but it might be that in looking at this analysis you feel that that position for the 5-hour cycle peak is in fact incorrect, and so you can move the VTLs around to suit your own opinion about what is happening in the analysis. Now, of course, if price crosses up above this VTL, we will have confirmation that a one-day cycle trough has formed in the market. VTLs are closely based upon the analysis, and so if the placement of a trough or a peak is not correct, then the evidence that is given to you by price crossing that VTL should also not be trusted. You should be wary of that, particularly if you are moving your VTLs around and you are in fact invalidating your valid trend lines because of skipping peaks or troughs. How can you use VTLs to make trading decisions as opposed to simply using them to give you information about the analysis, which might be interesting, but what you want to be doing is trading your charts, not simply understanding the analysis. The way in which VTLs can be used for trading is because they provide us with confirmation that a particular trough or peak has formed in the markets. You can use them as levels to enter into your trades. And so, for instance, looking at this chart that we have in front of us, if we were waiting for a one-day trough to form and we wanted to enter into a long trade when that trough had formed, then we could use the white cycle VTL to give us confirmation that that trough has formed, and therefore potentially an entry level into our long trade. Another way in which VTLs are often used is demonstrated on this chart, and that is to use the return to the VTL as your entry point. Here is the upward pointing VTL of the purple cycle that we looked at earlier. As I mentioned, when price crossed down below that VTL over here, that gave us confirmation that the white cycle had formed a peak in the markets. Now, we were also expecting a peak of the one-day cycle, as you can see from this circle over here. And so the chances were that when that 5-hour cycle peak formed in the market, it was also a peak of the one-day cycle. That should give us the opportunity to make a fairly good short trade. And so the way in which the VTL could have been used over here was to wait for the purple cycle VTL to be crossed over there, then to wait until price returned to the VTL, which it did over there. At that point, we could have entered into a short trade because that crossing of the VTL followed by a return of price to the VTL for one last touch is something that you will often see. And that's a very useful way of using your VTLs and trading on the basis of those VTLs. Let's zoom in and have a look at that in a little more detail. Here we can see the trough of the purple cycle that the VTL is drawn on the basis of. Here is a very good clean cross down below the VTL. Look at that nice swift action through the VTL. Price then returned to the VTL, touched it very neatly, and that is your signal for entering into a short trade. Trading VTLs in this way avoids some of the problems with the VTL being too closely attached to your analysis. If you trade the VTL as price crosses the VTL, then you are in danger of making many premature trades because the VTL actually turns out not to be the correct valid trend line because of an incorrect placement of a trough or a peak. The VTL is a powerful tool that gives us useful information about what the cycles are doing in terms of whether peaks and troughs have formed in the market, and it is also a useful tool to be used in making trading decisions. It should be approached with some caution, however, because of the fact that it is so closely based upon the analysis that you have on your chart. As long as you understand that, then you will find the VTL to be a very profitable tool.